Good morning and welcome to the Stoic Team podcast for the first week of April. Today we're discussing the ins and outs of 203k loans. I'm Peter LoPresti, proud member of the Stoic Team and Realtor at Exit Strategy Realty.
Hi, I'm Peter Georgitsis, a senior mortgage advisor at Preferred Rate. I'm really excited about talking about 203ks today.
Thank you, Peter. I always have a situation where because FHAs are one of the more accessible mortgage products, where I have clients who qualify for FHA only properties, but there aren't any current properties that would qualify for FHA mortgages on the market for them. It always creates a bit of a difficulty for us because they see properties that they like and are in their price range, but simply wouldn't qualify for FHA. I'm so glad that we're taking the time today to talk about 203k loans and specifically how you think this could be a solution for these types of clients of ours.
It was really an interesting point that you brought up. So when you say they don't qualify, let's be clear, it's not because they income-wise or asset-wise. Why do you feel they don't qualify?
Specifically with the traditional FHA, it has an appraisal that almost has an inspection as part of the appraisal. And sometimes the FHA appraiser will not pass the home for minor things such as chipping paint. Sometimes they don't like the exact height of a railing. Really minor things that can be fixed after closing, but still FHA, the traditional program, will not allow people to close on the home as it is.
Very good. And it's interesting, because of interest rates being higher and money or credit has been tightened because as interest rates go up, lenders also are concerned about people borrowing money. So you're right. It feels like there's a squeeze. So we're very blessed in the Chicagoland area that we have properties that unfortunately need some love and work and care on them. And you are correct, Peter. Sometimes we've had inspections that have failed because unfortunately the seller doesn't have the funds to do the repairs or compensate the client to do the repairs. So you're right. This is a perfect program for those type of properties where if the property needs some additional work, and also let's not neglect this, the program also helps out the people who are able to acquire the property because it's in decent shape, but they don't like the room size as an example. They notice that even though the roof is still good, the life might be less than they would desire. And maybe the windows are not their style, or they have a vision of converting that single family house to more of their liking, their taste. So the 203k does touch all those buttons where that needs to be taken care of but unfortunately the seller doesn't have money to repair, and we can acquire those type of properties with the 203k and also to enhance the property.
Amazing. So essentially the 203k loan, it's basically you put the 3.5% down like you would on a traditional home, but you put the 3.5% down on the total amount, which is the amount to purchase the home as well as the amount to renovate the home. Is that correct?
Correct. Let's use an example. So we're talking about single family homes. Say the purchase price of a single family home is $200,000. The loan amount limit in Cook County as of today is $472,000. So there's a difference of $272,000 that you can use towards the fees and repairs of the building to your liking. Now you don't have to go up to $472, but in this example, we want to explain that it's the purchase price of the building, in this example $200, plus the other cost of renovation with fees that could go up to $472,000, and that would be called your acquisition cost. And the 3.5% down would be taken from that amount, correct?
Excellent. And from my understanding with the FHA loan limits, that based on the number of units in the building, that the limit increases as well.
Correct. That's a really good question and good point. So if we just went over an example of a single family home, the loan limit is $472 in Cook County. On a 2-unit, it's $604,400, and on a 3-unit, it's $730,500, and on a 4-unit, it's roughly $907,900.
Impressive. I know a lot of my clients, they are always interested in trying to get a 4-unit building that has 1 commercial unit and 3 residential, which this type of building qualifies for FHA multi-unit financing. But of course, if you're looking for such a specific building, it's very hard to find something that is already perfectly how you want. But using this loan, someone would be able to buy perhaps an abandoned 4-unit building that isn't currently in the condition that they want, and go ahead and do a custom build out for their business in the commercial space. Obviously, pick out all the finishes on the other 3 residential units, and be able to really custom make something that they would need to be a home, not only for their business but for themselves as well.
Well, you made a point of that building. Now remember, FHA will allow one of the units that it's commercial not to exceed more than 25% of the total square footage of the building. So keep that in mind. But as an example, as you said, say unfortunately it doesn't meet FHA standards of just basic that a person could occupy that property. You're right. This is a perfect example of doing a 3-unit bill, or it's technically 4-unit bill with a commercial, and as long as it doesn't exceed 25%, that this program will gut the property, fix it to their liking, and it would be that and it would be a home of their dreams, of course.
Perfect. So my background's a little bit in construction as well as HIDOs, and so we have lots of different clients who are very familiar with construction, own construction companies, or work for a large construction company. And most of these people are pretty particular about how they want to build their home, especially since it's the industry that they work in. Are there any limits of which qualified contractors you're able to work with? Or if you could kind of just let us know a little bit of the FHA consultant that comes in and the relationship between the client and the contractors.
There are 2 phases of the 203K program. This program, the first part is called limited, and the other one is called standard. I'd like to use the standard because it gives us more flexibility. When you use a standard, you'll have a meeting. I work for Preferred Rate. We have a department specifically for 203Ks and renovation programs. So the person in charge of that department will have a consultation with everyone just to make sure everyone's on the same page. We're a team, meaning the Realtor, Peter LoPresti, Peter Georgitsis, myself, and the client, of course, and then Bill Young will have a conversation, answer all the questions for the consumer, make sure he's comfortable. But the other thing is there's a 2-phase process before anything really starts going. So once we identify the property, purchase the property, you would inquire with a contractor of your choosing. It doesn't have to be FHA approved, but someone who's reliable. Whoever you choose is up to you. Now in the consultant piece, we will do our best to pick a person that objectively is protecting you, to make sure that the contractor is doing what he needs to do to be done. There's also minimum requirements that have to be met pertaining to what kind of repairs have to be done. We want to make sure the building at the end is to the liking aesthetically, but also safe and healthy for the consumer when he purchased the property.
Excellent. Thank you so much for that clarification. So just to recap a bit, it sounds like, let's say if you're looking for FHA properties and you're having a difficult time finding them, this 203K option would be an ability for you to find a fixer-upper, still only put 3.5% down on the cost to purchase as well as to renovate, give you the flexibility and to be able to design your own space. And then, of course, once the whole project is done, you don't have to refinance out of a construction loan like sometimes happens to a lot of people who want to do these large renovations or new constructions.
Yeah, the beauty of this product is that you might be concerned that you can't find a home because you don't have additional assets to do repairs and to fix the home into your liking. It's one loan. The money will be dispersed in stages when the work is done. At the end, it's all about the client and his safety, and also make sure that that everything works to his liking and that he's protected. And that's the goal always for the way we do business.
Absolutely. Well, thank you so much, Peter, for your time. I think that All of our clients are now educated on this 203K, that it's amazing for, let's say, if you're a contractor and you're handy and you want to kind of be a little more involved in designing your home, as well as if you're, priced out of kind of the home market right now where it is, there's a great option to empower people to be able to do the repairs that they want to do. Is there anything else you'd like to add or something you feel like I'm missing about the product?
Yeah, and I just want not misleading. We do know a lot of people who are in the industry. The intent is not for them to do the repairs objectively. They are knowledgeable, but the contractor that they choose has to be arm's length, meaning they can't do the work. The assumption is that they can't be their own contractors, because you really want to keep an arm's length situation. Also, in fairness to the individual, once you do your own work, you can't be objective. So you need an objective party to make sure the things that need to be done for the well-being of the building is done from an objective standpoint. So that's the only clarification I want to make sure, is just because someone understands the business, he can't do the repairs himself. He has to have a contractor to do that.
Absolutely.
But he can choose any contractor that he wants to choose.
Understood. Perfect. Well, thank you so much, Peter. We appreciate your time. And again, this is Peter LoPresti with the Stoic team, proud realtor of Exit Strategy Realty.
Thank you so much, Peter. This is Peter Georgitsis from Preferred Rate, a pride member of the Stoic team.
And for any more information, feel free to visit thestoicteam.com. We have links to all of our podcasts, as well as our blog posts and other informational posts that we make. And most importantly, we have a button right there for you to get straight in contact with us to schedule your free initial consultation to discuss what your home buying goals are.